A weaker than expected print of inflation suggests that the Fed will cut rates in June. A hotter print is going to push that rate cut expectation out further. Here's what you need to know before the bell this morning. The market yesterday, we broke again below that 20-day moving average, but right at the end of the day, in the last 30, 45 minutes, the market had a fairly strong rally, got back above that 20-day moving average, so continuing to hang on to that level of support by fingertips at this moment. But the market's not ready to give up the ghost just yet on that support level that's been holding the market together really ever since November. This morning, of course, if we come in with a weaker than expected, right now the expectation is for about a 0.3% increase in inflation last month. Now, interesting, this story out this morning that the BLS actually released the inflation data early to some Wall Street banks. So there's a big scandal going on that the Wall Street banks knew about the hotter rate of inflation in January because of a change to how they calculate the rent, right? We talked about in January, had this hot inflation print because rent went up in price. It was due to a mathematical change. So again, are we actually measuring the data? Or are we just doing a lot of, manipulations to the data? We'll see. But anyway, kind of a big scandal going on right now because of this early release of data. But this morning, expectations are for 0.3. If we come in below 0.3, in other words, come in with a 0.2 or a 0.1% print, we're going to see a very, very sharp increase. And in fact, we should be able theoretically to take out this level of tops that we have been putting in now for the last several trading sessions. We've had this kind of top that we were building and multiple tops there. Market kept bouncing off of that. We've been compressing that channel between that kind of top and the 20-day moving average, which has continued to rise. So again, a weaker print today should push us out of that range, put us back onto that trend that we've been in really kind of since November, this rising trend. We started kind of petering out here a bit, showing some signs of weakness, but a weak print should put us back on track. A hot print is going to break this 20-day moving average and start pushing us towards the 50. So again, this is going to be a binary outcome today in terms of inflation, so we're watching it closely. We'll talk about it more tomorrow with Michael Leibowitz. But the expectation for right now is kind of a inline print. Now, if we get something very close to inline, market may not do a whole lot today, because this is all going to really kind of register off whether or not the Fed is going to cut rates in June. A weaker than expected print of inflation suggests that the Fed will cut rates in June. A hotter print is going to push that rate cut expectation out further. Again, this whole market is hinged right now on whether or not the Fed is going to cut rates. That's all going to be determined most likely by this print this morning on CPI. So it's become very, very important to the overall market. So we'll be watching it. And again, we'll talk about this more tomorrow. We'll, of course, write about it in the morning in our daily market commentary. But again, for right now, nothing has really changed in the market at all. We continue to hold on to that support level. It's just kind of a waiting game to see. So anyway, keeping that up. That's what you need to know before the bell this morning.